Allowing yourself to be led by the higher time frames is the best decision any trader can make, but even more so, being able to scale down to a lower time frame and developing entry criteria that actually guarantee a safe stop loss and a fair risk to reward requires great skill. And that is why in today's video we're talking about time frame confidence. This is a before screenshot of a trade I took on oil, applying everything that I will be teaching you in today's video. This is an after screenshot, and this is the higher time frame setup that actually inspired the whole trade. Now, I couldn't get the whole risk to reward on the higher time frame setup because, as you can see, sellers started to step into the game as soon as price got into 85.62. But overall, I'm very happy with this trade. So I'm actually going to start up with price action on the weekly. I know this looks discombobulated, but that's not to say it's impossible for us to understand. And as always, I love to start reading my charts from the left and work my way to the right where current price action is, and then just sort of focus on that area and not allow myself get too distracted with everything that is actually going on the left side of the chart. As you can see here, we had an impulse, a retracement, a break of structure here, retracement into this order block that's actually right here, another impulse, break of structure indicating the willingness of price to continue to the upside, and then we actually get another order block here. The price has actually come back to mitigate. If you actually study price action, you would see how price started to change its character once we got into this area, and then this gives you enough reason to trust price action and let it lead you. So I'm going to go ahead and delete everything on the charts and then focus on this area for now. So as you can see, we had series of breaks of structures to the downside from this area all the way down. You can see break of structure, return into this order block, break of structure, a return into this order block, a break of structure. We didn't really get a return into an order block, another break of structure here, a return into an order block that failed to create a new low, because I wouldn't really call this a break of structure, even though it might be a break of structure on the higher time frame. But then this rejection actually tells you the price was only trying to grab sell side liquidity in this area, and that liquidity it took from here was what fueled the movement of price all the way back into these areas, and then taking out all the liquidity that's sitting above these highs. So that is how you want to try to understand price. I'm going to delete this once again just for us not to get confused. So what you see, price failed to create a new low. We had an impulse that caused a break of structure to the left, and then what you can actually see is price returning into this order block. So now I'm actually going to scale down to the daily time frame and at least just try to understand everything that is going on within this impulse leg. We're inside the daily time frame right now, and I'm just going to take my time to explain to you how price is actually acting inside this order block. So this is a weekly point of interest. Notice again how price starts to act as soon as price enters into this point of interest. So price creates a lower high, the break structure. I wouldn't say this is a lower high to create a new low. This would just be a W pattern to me. You can see a break of structure here. I'm gonna go ahead and delete this break of structure, a return into the order block that actually sends price to the upside. You can see another break of structure here, return into the other block. Now, it's really fascinating to me how price does the same thing over and over again, and all you have to do as a trader is wait for price to develop these patterns, and you scale down to the lower time frame and develop entry criteria once price is in your point of interest. That is really simple. It's not so difficult to do. So you can see the price continues that sequence all the way up. We have a break of structure here, but we didn't have a return into this order block, and that actually leads me to where current price action is or was, which was a break of structure. And then I was looking to say, okay, 81.58, or like say 81.50, let me see, what would this actually be? Cool. coordinates. Okay, 8169 was an area I was looking to buy price from. So once price got into 8159, all I thought about was how to scale down, and that's all you have to do, guys. It's nothing too complicated. So now you can actually see how interesting this is, from the weekly time frame to the daily time frame, and now we're about to dive into the 4-hour time frame, and that actually brings us to the next thing I want to share with you, which is how to choose the right order blocks. So I'm actually going to scale down to the 45-minute time frame. I'm currently on the 45-minute time frame, but before I go back to the 45-minute time frame, I just want to mark the highest point of the order block and the lowest point of this order block, so that we can understand everything that is actually going on inside this time frame. So I think I'll go to the 30 minutes instead of the 45, because there's a lot I want to show you. Okay, all right, we're inside right now. Okay, so when it comes to choosing order blocks, you want to be really smart about it. In as much as this looks like an inflection point, you can see some imbalances here. An order block that needs to be mitigated well within our point of interest. But ask yourself this question: why would this level hold price when you have an order block right here with a bit of imbalance and a liquidity pool sitting right above it? Why would price stay at this level when you have this level? So if you actually go through your charts, you would see that price is always creating this fake point of interest for early buyers, and I want you to trust me that more often times than not, price will end up gravitating into this area, and this wouldn't be your area of inflection, but this order block right here that has a liquidity pool sitting right above it. The next thing I want to do now is delete this, and I'm actually going to leave a marker right here. I'm going to place another one here so that you can actually see what happens when price got into this area. This is the highest point of the order block that we're going to be trading at, and then this is going to be the lowest point where our stop loss is going to be. Okay, so if you work your way back to where price was at the current time, you can see that within the first range of the fake point of interest, we had some rejections. A lot of early buyers that actually think right after this rejection, this was a breaker structure for them to buy. But notice how price broke below this level with a large candlestick, and then price taps into the lower order block, and this was only a liquidity pool that was sitting above this order block that served as a fuel to move price to the upside. Now I want to show you that I was able to get a first entry when price actually traded into this order block. This was the screenshot of the entry I took. I couldn't take a before screenshot, but then when price got into 81.72, you can clearly see price created a low. This was the first point of interest. You can see that breaker structure, a return into the order block. You can see some sort of rejection, but this is just to make a lot of traders click that buy button, okay, to generate the liquidity that was needed to actually push price to the upside. But then notice what happened. Now this is why it's very important for you to always develop entry criteria. You always want to ask yourself, what is that pattern that I'm actually looking for? And whenever I see that pattern, I'm never afraid to pull the trigger. This is one of those patterns, guys. A classic W pattern that takes out the previous low. You can see that impulsive candle to the downside. A lot of people selling this thinking, oh, price is actually going to continue going down. And then watch how the next candle actually brings price back into this level. And that was where I was able to get my entry. This was around a 1:5. So after taking this entry, I noticed, now if you look to where price was currently at the time, you can see we had a breaker structure, a bit of imbalance here The same setup, like I told you guys, price will always create these fake points of interest waiting for traders to buy, and then it will always gravitate to the lower one, and always this would be the inflection point. So you can clearly see how you can get multiple setup just by taking time to understand price action rather than trying to be right. This was the initial entry I took, and this was the second entry I took, which was basically this trade, 81.75. Beautiful, beautiful trade. As you can see, this was the liquidity grab, break of structure here, another break of structure, and then price was actually returning into this order block, and this was how I was able to get the second setup of the trade. I couldn't get the whole risk to reward on this trade because I started noticing some price action, which I'm about to show you in a minute. So another thing you want to do when you're trading is not to be heavily biased on your trade. You have to be ready to look at price at both sides. So what I actually noticed later on was we had an order block here that caused a break of structure to the downside, and I think what price was only trying to do was come back into this order block, mitigate whatever open orders that were there, and price continued to the downside. Now if you take this point of interest and we go down to, let's say, the 5-minute time frame, you're going to see exactly what I just taught you. You can clearly see that, okay, I think the 5 minutes is too low. I just want to show you guys a bit of what I was trying to explain. Now you can clearly see that you have some equal highs here. You even have a point of interest that a lot of people would actually think they should be selling from, but this is actually where your true order block is, this one here. And then you can see how price come just here. This would be the lowest point, this would be the highest point. This is your point of interest. And then you would actually see that if you had caught that trade, you're likely going to catch a 1:14, I think. Oh, that was even more than I thought. A 1:20. This is one of the reasons why I love to trade oil. It's got some serious range. I think I caught this trade in Asian session where a lot of people think there wouldn't be liquidity. You can see that price didn't even care. In about a few hours, price was already reaching take profit. So do subscribe if you haven't already. Make sure you stay relentless, and I will see you in the next video. By the way, don't forget to follow me on Instagram. I usually share my entries on my Instagram story. So you want to follow me on Instagram when I'm sharing these trades, and you can also take them with me. And stay legendary. I would see you in the next video. Peace out, guys.